Property prices are falling. And this Christmas and New Year, it ain't gonna be ho ho ho, it's going to be the sky is falling. Check out these headlines going on right now. If you're interested in what one random guy on the internet has to say about it all, and how long it will last, and what will turn it around in our major capitals, this video is for you. So let's see what is actually happening. Property prices are falling in Sydney and Melbourne. The rate at which property prices are falling is also increasing. We may be going through the eye of the storm right now, and I'm going to answer is it actually going to get worse too? But let's unpack why it's happening. Now, the most obvious reason, and yes, this is true, property prices are overvalued. They are simply too expensive for the interest rate environment that we are in today. Property prices are at their peak levels in Sydney, and in Melbourne they are off about 5%, but they're just really, really expensive, and people can't afford to pay these prices anymore. That's why prices are coming down a little bit. But just because something's expensive, the price doesn't change. Sydney's been expensive for a very, very, very long time, and it will keep being expensive even after the sky falls in. And if it falls in 2, 3, 4, 5, 6 times, there's gonna be most of us that say it's still too expensive. So that reason isn't enough. But what's actually happening is people are selling their homes. Now, it's investors, over-leveraged investors in particular, that are selling their homes in Sydney and Melbourne, and maybe they're buying somewhere else. Look at Adelaide, look at Brisbane, look at Perth, prices are rising a lot and investors are buying up there, but in Sydney and Melbourne, investors are selling out. It's because they got larger loans, the value of properties is higher, and the cash flow losses that they have are bigger and bigger. I've checked this out. Look at this research from SQM here that has the number of distressed listings in Victoria. Oh, what a scary word. Distressed listings. I don't even know how you measure that. It's a bit crazy. I think they use the terms like must sell, vendor must sell, I need to get out of here. It's on an upward trajectory and it looks pretty scary right now. Now, this isn't mortgage arrears or anything like that. It's just people in Victoria right now being like, get me out of here. You would be surprised at the number of conversations we've had this year from savvy property investors who've been investing in property or invested in property for decades that come to me and say, Reedham, I just want to get out of this. I've got FOMO with Townsville and with Northern Queensland, with Perth, and my Melbourne thing, it's just a pain. And now they've hit me up with land taxes. Man, I feel like I'm hated. I don't want to get out of here. That's the conversation that's happening with a lot of Melbourne investors, and it's in the data. Some locations have had 50% plus increases in listings. Check out Sydney CBD. So I've used this as a benchmark because a lot of Sydney CBD is actually investor activity. Investors all across the country that don't know much about property investing, that don't watch this channel or watch any other property channels, they're just a little bit clueless, let's just say that. When it comes to property investing, they just buy in Sydney CBD because it's close to the city. It's so close that it is the city. You know what? Distance to CBD, 0 kilometers. I must invest there. That's kind of the attitude that you have. So it makes up a bigger chunk of investors. Now look at what's happening in listings in this particular postcode. It's shooting up. Investors are getting the fudge out. That is the story of why property prices are coming down. You have another impact too as to why property prices are coming down now. It's all been insulated. We've all been protected. Property investors have been given a little bit of a nice cloud to come off on. It's kind of like we all jumped off a plane at some point in 2022 when the RBA came in and said, I'm increasing interest rates, when Philip Lowe did an interview and said, I think the cash rate needs to be 2.5% plus productivity, 3.5%. And everyone's just like, are you mad? Are you bonkers? Are you serious? This was in March 2022. And everyone on that plane was like, I want to jump out. I want to jump out of this property investing thing. Scary, scary, scary. But then there was this cloud that came by and that saved us all. And that cloud that we landed on, not a gas cloud, like an actual pillow type cloud that we jumped off and we landed on. Property investors landed on the rental appreciation pillow that kept us floating along and being like, yes, interest rates are shooting up. But magically, rents have just started going, whoo, right at the same time. And out of nowhere, we're like, Australia doesn't have enough homes. There's no homes. I can't see a house. There's none available. Don't know how that happened at exactly the same time, but my God, was that a savior for property investors with interest rates climbing so high. But that story is gone. Somebody's popped it. Somebody's been like, nah, no more rental increases for you. You've pushed the barriers too far. The renters have been like, nope, I can't afford to pay it. I'm not paying that stuff anymore. And that's what's happened. So because you have this nosedive in rental growth, you also have that, that saving fact going away right now. And that's really hurting Sydneysiders at the moment because they're going to have to pay these really high interest rates, these really high mortgage balances, and they don't have higher rental income supporting them through it anymore. In some places, rents are going backwards now too, and that's going to be really dangerous, where property investors need to make up that high interest rate and also pay for that, rent falling impact on their properties. You also have another impact that's happening right now, and another reason why property prices are falling in more expensive areas in particular is that people are just moving their demand away from these areas into cheaper areas. You have that investor activity going on everywhere. So that's a pretty common story. So that's why property prices are falling, at least according to me. Could it get really bad? That's the next question to ask. How bad could this get? Is it going to get nasty? Are we going to have the sky is falling headlines? Is that going to become a reality, or are we just going to get a couple percentage point decline in house prices? Right now, the answer is it seems to be a little bit of a shallow correction. Prices falling, but not too dramatically, not falling that fast either, and definitely no price crash happening, just prices coming down a little bit. I think it's going to get a little bit more aggressive. That's the truth. I can feel it on the ground. I hear it from buyers in Sydney at the moment, and I hear it from sellers in Sydney at the moment. I think price falls will get a little bit more aggressive than they are at the moment, but I don't think it's going to get particularly bad. I think right now it sort of suggests that it's probably going to land in between that -5 to -10% range, and that does seem like a bearish view as well. If you ask most people, I think they'd say 0 to -5, and I'm probably saying that it'll probably be more like -5 to -10, or more like -4 to -8 sort of territory. We are in the middle of that at the moment. I think the eastern suburbs has already felt it, and it's just going to spread across like a little disease that goes in all across Sydney. And that red that all the data analytics people represent, all the blue is going to start turning into red, which is like negative. No, I'm not talking about politics. I'm talking about price growth charts. Okay, this will be the 4th time property prices fall as well. Now, this leads to the question, when is it going to stop? How long is this decline period going to go for? And when are prices going to rise again? This will really depend on a couple of things. So let's look at history a little bit. History tells us that Sydney decline periods last for 7-8 months. So this kind of suggests the middle of next year. I think that's probably right, because, not just because it's going to be 7-8 months and prices will start rising, but because interest rate cuts are going to come in and around then, and that is probably going to add a little bit of juice, a little bit of momentum back to Sydney house prices that triggers this shallow decline straight back up. So we might be in a position where in about 18 months or so, house prices are pretty much back to exactly where they were, and house prices have done nothing. If I look at this is the rate tracker at the moment as of the 5th of December, the time of recording. This video will be released in a week or two. And it suggests that rate cuts are coming in April 2025, and there'll be another rate cut or 2 by August. So it suggests 2 or 3 rate cuts, down to about 3.5% by the end of next year. So that, suggests a few rate cuts, 3 rate cuts in 2025, it's 4.35 at the moment, go to 4.1, go to 3.85, and then 3.6. So that is the 3 rate cuts sometime in 2025. If that happens, that's probably going to end this decline period. There's one other factor that we probably got to think about as to whether property prices continue to fall or not. It's this chart. The number of employed people have been going up. We've been creating a lot of jobs. Will that continue into 2025? I'm a little bit unsure about this. We did this video, check it out, about the AI warning to jobs. I don't really know when this will happen, and I don't know if it will play out straight away, but there is a very real conversation to be had about how jobs are going to continue when, the banks are all cutting out their call center workers at the moment, and other people are just going to be like, I can AI this. I was speaking I feel a little bit bad sharing this one, but I was speaking to a person that works with our team at the moment, and I was telling them about my ability to click a few buttons and edit a few videos on my phone. That isn't new technology. You couldn't do that a few years ago. That's some AI incoming being like, cool, chop this up. AI being like, cool. AI coming up with titles, thumbnails, things like that in my day-to-day world. AI helping us with credit assessments. AI helping us writing emails. Lots and lots of things that are now feeding into the way we all do our work. That could potentially mean some jobs go because we become a bit more productive. This is a really, really good thing for society. We become more productive. That increases living standards. But if this starts happening a lot in 2025, especially the call centers, Sydney, that could be thousands of jobs, especially if all the banks do it at exactly the same time, being like, hey, big call center, this whole building full of call center people, you're now replaced with a chatbot. If that happens, that's a little bit scary. I don't know how that really goes. And, certain sectors of the economy are more prone to others. And I feel like Sydney and Melbourne could be pretty prone to that, given the nature of our economies and service sector economies, really, that, labor, dominated by labor, like workers who create a lot of the activity here. Those sort of jobs could be a little bit at risk. I don't know if that's 2025. It could be more of a, 5-year play. But we did do a video on it. It is a little bit of a warning, so that is something to think about. If you're watching this pre-Christmas, you may have just lost your festive spirit listening to this. I'm going to cheer you up and say property prices will do pretty well within a year or so ago, and property prices will probably turn things around. I think that's the most obvious base case. And yes, we're in for a little bit of a bumpy time over the next few months, but things will all be okay. Interest rates will come back down, put more money in your pocket. So by next year's Christmas, you can buy some better gifts for everybody. If you enjoyed this video, hit that subscribe button. Drop me a comment below with your thoughts. I'd really like to know what another person, another random stranger on the internet has to say about this all. If you can keep it professional and avoid talking about me and my face or whatever nasty comments you may have, ignore all that stuff. Tell me what you really think about what property prices will do in 2025. And if you enjoyed this video, hit that subscribe button. Follow me on my journey to produce more and more property content for you all.